Let's get the latest on this developing story. Eamon Javers is live at the White House with the details. Eamon.
Yeah, Melissa, that's right. I'm told that those headlines that crossed earlier today, those are accurate headlines. That's what got the market's attention. They are considering some measures behind the scenes here at the White House to stop U.S. investors being able to invest in Chinese companies in one way, shape, or form or another. But they're very early on in those conversations, is my understanding. And there's no timeline at this point for any fundamental decision. All of this is framed in the guise of investor protection. The idea here is that there's a concern that there are some Chinese companies that may be listed in the U.S. that aren't exactly what they're purported to be because of the accounting standards and other differences between the way the two countries handle corporate disclosures. So that is being discussed behind the scenes. It's not clear. There are a lot of options, not clear where they're going to land or when that decision is coming. One model for it might be the piece of legislation that Senator Marco Rubio and others are considering up on Capitol Hill. They've talked about that in the past. The idea there would be they would delist companies unless they conformed more stringently to American securities regulations, those Chinese companies would. So that's one proposal, but Rubio's office told CNBC this afternoon they have not been in direct contact coordinating with the White House on the proposals that the White House is working on. So that's a separate idea that's moving on a separate track, but it gives you a sense of where this might land. Ultimately, it's still TBD, though.
Would this have to come from Congress, Eamon, or a vote by the SEC? Or, I mean, how can the administration force an exchange to decide what their listing standards are?
It really depends on what they decide to do, right? Some of those ideas, like you're talking about, would require Congress to pass a law, and that would mean the White House would have to get support from Democrats to do it because Democrats control the House of Representatives. So in a contentious election year, that might not be as doable. There might be other smaller, more regulatory changes that they can do on their own. I'm told that the mechanics of all this are still being discussed, and they don't have a particular plan for how to roll it out yet because it's still very early on.
Okay. Eamon, thank you very much. Eamon Javers. There are so many ways to go, but what is definitely clear is the reaction that we saw in today's markets. We had a lot of the Chinese ETFs dive lower, close at session lows. A lot of the Chinese stocks did the same. A lot of sort of the trade war poster children stocks like semiconductors took a further leg lower as if the Micron news wasn't enough and closed on the lows of the session. So where do you go with this here in terms of
Well, I mean, if this is I don't know what this is, number one. However, if it's a negotiating tactic as we get into the October date, whenever that is, the 10th or so, when the two sides are going to sit down, it's a pretty high-stakes game of poker they're playing. Now, I think there've been rumblings about this over the years. I don't think it's ever been considered all that serious. But again, a negotiating tactic, I think you have to be worried. But I'll say this. You know, if you had told me at 8:30 this morning that these headlines would come out, and say, Guy, where's the market going to be? I say, well, given the run we've had, given the backdrop of everything, the S&P is going to be down 50 to 60 handles. Nasdaq's going to be down 150, and the bond market is explode to the upside. None of that really happened. Again, it speaks to either the complacency of the broader market or the strength and resiliency of it. Now, I say it's complacent, but I can understand the bull case that it's strength and relative strength given the rest of the world.
Yeah, I think it's probably resilient. It's probably all of those things, but it's probably more resilient. It's probably not getting ahead of this, and the fact that this probably could never happen. I don't think you can delist all of these names. I don't think it's going to happen. But when you look at we're at the end of the month, end of the quarter, when you look at where we were 7 handles above negative on quarter, we bounced back dramatically from the middle of the day. That's impressive.
That's true.
And we did bounce back right off the 50-day, almost to the number. So I think there are a couple of things to think about here. Number one, just think about the MSCI indexes, for example. You know, a lot of clients in general, they get exposure to international stocks, emerging markets via ETFs that track that index. So when you think about EEM, for example, you're talking about a 30% exposure to China, and that's been systematically going up as MSCI has been increasing the exposure to China. So that's important. As far as the broad market, I think we're probably range bound, quite honestly. And to your point about the market recovering today, I think a lot of it comes down to positioning as well as sentiment. And I keep saying it again and again on the show, and I probably sound like a broken record, but CFTC positioning, second week in a row, net short. AAII bull bear survey, flip negative, so bears outweighing bulls. So I think it doesn't mean we can't correct, doesn't mean there can't be volatility, but I think that puts some floor under how bad things can get.
By the way, nice haircut. Very high and tight, Jeff.
Thank you.
Good
I did it
job
for
there.
you.
That's the way it's done, right?
So this felt a little bit like an American company's hereby will no longer, and so in terms of what listing standards are, let's be clear, there's a lot of Chinese companies that aren't listing here because they can't make these standards.
Right.
So the good news, folks, is I think the American listing standards and the exchanges are very, very high, and they include accounting standards, and they include transparency and corporate governance. I think that is really the standard, and I think that is something that will win out. But we're talking about, Jeff's talking about emerging markets, which I would put closer to 45% China, and where you can see actually from the April highs, the downtrend, which EM is now 4 or 5 sessions well off of trying to break through. It's a downtrend it can't break through. And frankly, with the dollar going higher, I have trouble seeing this breakout. Alibaba is a name that I'm long and a name that's done nothing for a year and a half. Essentially traded sideways. But if you look at the upper end of the range, anywhere between 180 and 190, this is a stock that's been dead money, despite the fact that you had a 2-day investor day. You've had Jack Ma kind of move on. People thought there was actually going to start to be a little more transparency, a little bit more insight and financial, a little more insight into how they were going to run their businesses. So it's not a particularly exciting time to be investing in emerging markets or mega cap
So you're
names.
saying regardless of this noise,
I'm saying it's
not right time.
I don't think even if the trade war ended tomorrow, I think these stocks would get a pop. But
the problem is
very
it's
concerned about the
bipartisan.
longer
There's
term game.
229 stocks. Everyone goes out on the number 156. If you add in Hong Kong stocks, it's 229. None of them meet the accounting standards that the U.S. companies do.
Wait, what do you? I don't understand. What number are you referring to?
156 of the listed
what?
Chinese stocks listed on American exchanges.
Okay, so 156 companies.
So it's
are listed
156,
here.
but if you go with the Hong Kong number, adding in Hong Kong and Chinese stocks, it's about 229.
Okay, and
none of them meet the accounting standards of the U.S. listed companies. None of them do. So some
So you're
meet
saying
more.
there's two standards.
There's two standards right now. Well, that's what this whole debate is about. And with that equitable act that they're talking about, they get 3 years to comply once that they list.
And I'll take Steve's. Well, I can't speak to the standards to be a listed company. But the concern should be, I would think, is there a retaliation now?
Yes.
That to me is the bigger concern. Again, we push the envelope, the Chinese push back. So it gets back down to, is this make a deal more imminent or is this make a deal less likely? I would say this makes a deal less likely. And again, it's shocking to me, and I've been wrong, so I have to prep, but it's shocking to me that even off the backdrop of everything that's happened over the last couple of weeks, the VIX still has a 17 handle, and we're still within a whisper of an all-time high in the S&P 500. Quickly, if you want to look at one thing, the Russell, the IWM, look at where it stopped on the upside. It stopped basically where we topped out in March and a number of times since that 158.5, 159 level, closed lower today. To me, the Russell's been a tell all along, and if that starts to sort of roll over from here, that might actually pull down the broader market.
I thought you were going to add in the price action of the exchanges today.
Yes.
The
Fair
NASDAQ
enough.
as well.
You're in my head while
more so than you're in your own
But the
head.
truth is, on the ice, that's a
Which should be
little
should be troubling to all of us.
On the ice, that's a small portion of
But
their
for the
revenues,
NASDAQ,
but it's a larger portion. And of course, people shoot first and then research it later. I don't think that this is going to happen. I think that's important. But this has been going on for years, and it stems from the House of Representatives, not from the White House. The White House is actually picking up on it.
I understand this has been going on for years, but it hasn't been going on until recently with the context of a trade war, with the context of a China that is going to look for ways to retaliate, to Guy's point. And if China retaliates, what can they do? They can make it very difficult for U.S. companies to expand in China, to do more business in China, to get their stuff through the supply chains in China, to do JVs in China, to actually go there.
And it already was. So to be clear, companies like Apple and some of the technology companies for sure have figured out what the rules of engagement are, and I think have kissed the ring, so to speak. And I think that's how a quid pro quo takes place. I do think that this is Guy, you're right. I ultimately, it's very difficult to see how this doesn't lead to a ratcheting up of a tit for tat. And I think as we go into October 10, I think the market is a little bit too complacent as it relates to trade. I think Jeff talks about where positioning says, well, not so complacent, actually. Right. Even though I think in the last couple of weeks, those AAII bull-bear spreads are things that can change pretty quickly. They're kind of like relative strength indicators. They can get pretty overbought, oversold. But the general positioning in equities is very underweight.
Yeah, and the one thing that continues to be strange to me, and I talk about this a lot too, but it's that correlation between Trump's approval rating and the de-escalation of trade tensions, and they're actually positively correlated. Trump has to know that. He sees those approval ratings, and those approval ratings are directly tied to the votes he's likely to get in the presidential election. He has to know that in the back of his mind, and even with impeachment coming up, maybe that pushes him to want to do a deal a little bit more to try to save some sort of face there. And to your point about the positioning, I think the one thing that might be underappreciated is that, look, the economy here isn't that bad. Consumer confidence bounced a little bit today. The housing data is better. I'm not saying we're off to the races, but again, as it relates to a support and a potential catalyst for that sentiment reversing.
Why would China retaliate? My point, because
why wouldn't it retaliate?
Because they don't want the supply chain to change any more than it's already changed with tariffs. So we've heard of Apple trying to work around China already. Why would they give other companies more of an incentive to try to do that? I think that maybe it makes it less likely that a deal gets done, but I don't see a retaliatory measure that behooves China to do.
Maybe. Well, I mean, I think what the other thing that Trump knows is that he's always emphasizing the spread, the difference in performance between Chinese markets and U.S. markets, and how they're feeling more pain versus the U.S. markets, et cetera. This is a way of weaponizing the trade war.
100%.
Of saying, you know what, we're going after Chinese stocks.
Right.
We're going to make it more difficult for you to raise capital in the best market in the world here, and that's going to hurt you.
I agree 100%, which is my point is and Steve might be right. I mean, why would I think as Americans we look through everything through the prism, through the lens of being American. So it's hard for any of us to understand how the other side would react. But if you take a step back and say to yourself, who's in a better position? Who's in a position that can outlast the other? I mean, again, President Xi doesn't have to run for re-election in a year. President Trump does. So my sense is, and I've said this for a while, I think the Chinese are better suited to play the long game than we are.
I think very clearly, though, our markets are the deepest, most sophisticated in the world. China wants to be a part of these markets, and I think this hurts.